Welcome to Inside Digital Assets, the podcast about the future of capital markets, tokenization, digital assets, and the technologies that power them. We talk to people driving this transformation about real-world projects, digital innovation, and one big question: what will the capital markets of tomorrow look like? Welcome to a very new episode of our Inside Digital podcast. And today I'm very pleased to announce a very special guest. I have today with me Ian de Bode from Ondo. Hi, Ian.
Hi, Lidia. Thanks for having me.
It's a big pleasure to have you here because we announced we have a partnership together. So it's very interesting for us to deep dive today a bit into that partnership, but also hearing what you're doing with Ondo, where you're looking at and where you're planning to go to. But for the listeners that might not know you, I'm not sure whether there are people around there, but there still might be people. So you're president at Ondo Finance. Congratulations to also that role, which you acquired very recently. And you oversee strategy, partnership and institutional engagement for Ondo, but you have been with the firm already a bit now for the last couple of time, also for building up Ondo. So very much like to hear how that has been going. Before joining Ondo, you have been a very, let's call it a traditional consultant. You worked for McKinsey. We have a career there. So interesting to hear as well how you got from that side of the business to the tokenized asset side. But so thank you for being here, and I'm very much looking forward to our conversation.
Thanks for having me.
Let's start maybe also looking a bit into your personal journey that you made. So how did you actually end up on the tokenized side of the world? Maybe you can share a bit those insights.
Yeah, thanks for the question. I, as you mentioned, post-business school, went to McKinsey, wanted to a wide variety of things, but it's around the same time that I discovered Ethereum as a concept. I'd heard about Bitcoin in, call it 2014, 2015. 2016 is really when I discovered Ethereum, and I was completely enamored by the concept of a smart contract, right? The fact that you could automate things on a blockchain that could then operate 24/7 without any human intervention. And I had, at the time, already done enough in financial services at McKinsey that I understood, oh, wow, this could actually be a pretty meaningful thing if it ever scales. At the time, it was very, very, very early. But I was completely enamored by the concept of trying to build out this whole, call it DeFi ecosystem before it existed. But in order to do that, you had to obviously put more assets on chain. You had to get the financial services companies to really take blockchain seriously. And so even back in 2016, I was this, associate that kept telling everyone, I want to do all the blockchain work that we can do. And people would look at me and say, what? But at the time, there was one guy already who had discovered the power of blockchain technology and was doing studies with banks to help them understand what is a blockchain, how does it work, what are the benefits of tokenization. So one of the first studies I did at McKinsey back in 2016 was for a couple of French banks to teach them about tokenization and the benefits of it. So been going back quite some time. I guess that's now 10 years ago. Obviously, since then, a lot has happened. Also, not a lot has happened in some instances. But that really was the start of the journey for me, at least within McKinsey, to try to do as much as possible on this concept of tokenization. At some point, you get a little tired of doing it for the large traditional financial institutions and telling them what they should be doing, when in reality they move very slow, as we all know, and they just or they just don't do it. That's also very possible. I have plenty of those. So about 2 years ago, I decided to join Ondo. I was very impressed already at the time with everything that they had shipped. I really thought, Ondo's always been a very credible and smart team with TradFi roots that understands DeFi as well, and really has the mission to build a more open financial ecosystem. And that as a mission always really attracted me. And when I was looking around in the market in terms of who's doing tokenization right, Ondo really was the one, quite frankly, that stood out. And so the decision to join them, quite frankly, was pretty easy.
How important was that that characteristic, which I also see is that you have some sort of a tie to the traditional industry at Ondo. How important was that for you also to make that shift to Ondo? How important do you think is that factor for success?
I think it's actually pretty important. There's a lot of reinventing the wheel in crypto. You know, TradFi does a lot of things imperfectly, but there's a lot of things that they do very well. And so Ondo's mission has always been, let's take the best of TradFi and improve that with the best of crypto. But in order for you to understand what is the best of TradFi, it helps if you at least have had deep exposure to both these firms, the markets, etc., so you really understand what works well and what does not work well. And sometimes in crypto, you see a little bit too much of we're just going to reinvent things from basics, which is very laudable. I mean, I like it because it leads to a lot of experimentation that in financial services has been lacking, quite frankly, for a very, very long time. But at the same time, it does mean that some people waste a lot of time trying to reinvent the wheel when our mission really always has been to just take the best of TradFi, put it on chain, and complement it with what blockchains and DeFi does best. A good example of this can be the liquidity that exists in traditional markets. I know we'll talk about that probably a little bit more soon, but liquidity in traditional markets is great. Ideally, when you tokenize an asset, you find a way to bring that liquidity on chain in the most seamless fashion. You don't try to recreate it. Whereas in many of the tokenization pilots that we've seen in the past, that seamless liquidity bridge was never built, in part because people were trying to reinvent the wheel.
I think it's very interesting. And can you elaborate a bit more on the Ondo side of things? So now being at Ondo and your view that you have with Ondo on tokenized assets and in general securities and how they are going to evolve into the next generation, next decade of technology.
For sure. So at Ondo, as I mentioned, our vision is really to create a more open financial ecosystem that anyone can have access to and really get the best available assets at the best available services at the best available rates, right? That essentially is what we're trying to do. We're also pretty unique in the sense that we're one of the only firms, maybe the only one, that is taking a full stack approach to building out these ecosystems. So we have the ability to not just tokenize our assets, but also to build protocols, build applications, build platforms, even build our own blockchain to bring everything together. So we really run across the stack. We started this journey by doing that for tokenized treasuries. We looked at stablecoins and the product market fit that they had and said stablecoins are great products, but they're not perfect. They lack very good investor protections. They also do not offer yield, at least at the time. So we thought, tokenizing a treasury asset is a very good place to get started. We have then focused on, since then, we've iterated a little bit in how we tokenize these treasuries. Happy to talk a little bit more about that. But then we moved over to public stocks, public equities, ETFs more broadly. We get a lot of questions on why, treasuries and stocks and all of these liquid asset classes, because there's a predominant theme that you tokenize illiquid asset classes to try to enable more access and get people to buy them. But our thesis has always been kind of the opposite. You tokenize things for two reasons. One, because you want to enable more seamless access into the asset. And number two is you want to enable it as collateral on chain, because then people can use it 24/7 margin or for staking purposes or whatever it is they want. So it's seamless access and collateral on chain. For both of those use cases, you actually need really good pricing discovery, because otherwise no one's going to want to buy your thing because they don't know if they're getting suckered or not, right? If you want to enable seamless access, people need to be able to look at an asset and say, I know this is priced in the right way, so I feel comfortable buying it. Same thing, if you want to enable something as collateral on chain, you need very good price discovery. Otherwise, the haircut you're going to get on your collateral is so large that it almost doesn't make any sense to do it. So for both of these two reasons, you actually end up with assets that are very deeply liquid in traditional markets, typically public equities and the like, because they have incredibly good pricing discovery because of the deep liquidity that already exists. So in part, it's kind of, we are tokenizing assets because the underlying markets are already efficient, right? Yeah. Because then we can enable them in the crypto ecosystem and for more seamless access. That essentially is why we're doing the things we're doing, but that's a complete 180 on a lot of the things that you read otherwise.
Yeah, but we totally agree there. And me personally, I have been involved in a lot of tokenization projects also early on in like real estate tokenization, all those private asset things that you try to tokenize, which I believe at some point in the future that might be an added value. But at the current point in time, when we look at what we are doing now, is exactly what you are saying, is we look at the liquid assets, and tokenizing them, in my opinion, as you're saying, makes sense because they're already liquid. And what we are also seeing at the moment is that for us, tokenization is just the next generation of technology, right? So after you had physical certificates and electronic registries, now you have tokenized asset. And what makes more sense than bringing asset classes on the next technological level than those asset classes which are actually being used the most, which are the liquid asset classes, right? The ones that are being transferred millions of times every day, right? And you need to have their more efficient settlement infrastructures that you have today. So our conclusion is exactly the same, right? You have to start where already liquidity is today. And you can even make that part more efficient, because that's also what we hear often. But those asset classes are already efficient, right? They might be on a trading level layer, but they are not that much if you look at settlement, if you look at cross-border transaction and the like, right?
100%.
Yeah.
Like fundamentally, this I guess goes back to the point of what does TradFi do well and what does TradFi not do well. TradFi does the trading of these assets on a centralized exchange incredibly well, right? The latency, the pricing discovery that you get there, unbelievable. You can make a critique about the trading hours, and I think that's fair. But when it's up and running, it's very, very deep.
Mm-hmm.
But then the settlement of these things you can hardly call that efficient, particularly if you then compare it to some of the efficiencies that you can get on a blockchain where settlement can be instantaneous, and you compare that to a T+1 settlement, right? So that's a good example of where you can really improve by just changing the underlying rails that this stuff works on. And that's ultimately why you tokenize something.
Yeah. Now, you recently launched your global markets suite, where you tokenize over 100 equities and funds, US equities and funds. Can you share a bit what you learned over the last few months when you were live, your biggest learnings since you went live?
Yeah. So I guess a quick recap. We launched on the global markets back in September, and it's the first platform that combines two components. Number one is the assets that we issue and the assets that you can buy are permissionless in the secondary market, meaning that you can freely transfer them around in the secondary market between any type of wallet. So they're very similar to a stablecoin in that regard, right? If you want to mint and burn the asset, you have to onboard with us. In the secondary market, you can freely transfer them anywhere you want. That's a design choice. There's not a lot of assets, tokenized stocks and ETFs out there that follow that model. There are some others, but that is one big component of ArmaGM. The other big component is the liquidity that is available to actually buy these assets, right? When you buy an asset on chain, whether that's tokenized Tesla or tokenized name your ETF, you want to make sure that when you buy the asset, you're essentially getting the best available price as you would get it in a normal brokerage account, right? Otherwise, why would people buy the asset on chain? Maybe there's a couple of reasons as to why they would still want to do it, but it's going to be very hard to scale these assets on chain if a user can get them at the same price as they would in a normal brokerage account. Well, again, when you look at the existing implementations, particularly for the permissionless versions, that type of price stability and pegs to the underlying typically wasn't there. And so when we launched on the global markets, it was the first time that you could buy these things with a permissionless format while having best execution that you would normally get in TradFi. And so since then, our platform has gone up to about 450 million in TVL. I think that means that we have about 65% market share in the category right now, which in a period of 5 months is not that bad. And it's growing pretty rapidly. But I think in part it's because it was the first time that you could combine the two. Now, in order to do that, we had to build a seamless bridge between the on-chain environments and the TradFi liquidity so that we could instantly mint and burn an asset whenever someone wanted to purchase it. And that whole infrastructure of really seamlessly connecting TradFi liquidity to on-chain liquidity, that had never been built. I think that was very clear as we were starting to build it. There's a lot of, and this may get into too much of the technical specifics, but the way our platform works is via intents. It means that a user basically signals an intent to purchase on chain. It doesn't immediately hit the buy button. There's a couple of steps. It's basically an RFQ model.
Okay.
Right? And that model is not the predominant model that exists on chain. People are used to buying with pre-funded inventory on chain, whether that exists on a centralized exchange or in a decentralized exchange. The entire model in crypto runs on pre-funded inventory, instant buys from available liquidity. And that's not how TradFi works, right? Even in TradFi, you can put orders on an exchange. You need to have the inventory somewhere, but at some point you net settle. It's not like, everything needs to be pre-funded all the time. And so that difference really came out as we were building the platform for the on-chain environment. We ultimately clearly made it work, but as we were dealing with some DeFi protocols, data aggregators, etc., we had to spend hours and hours educating them on how this system actually worked, because it kind of broke the fundamental mold of how a lot of people on chain think about markets.
Yeah. So you somehow had to disrupt the thinking of the disruptors.
That's essentially it.
But can you, so the users then ultimately, did they have some aversion to actually use such an RFQ model, or was it just rather a technical implementation hurdle, but once it was live, the users happily accepted that? Or do you still have hurdles for the users to get used to that? Or aren't they actually realizing that at all?
Yeah, we try to abstract it as much as possible from the user. So I'm pretty sure most users don't understand the technical specifics of how our system works. I mean, in the end, all a user cares about is how much can I buy? How much can I redeem? Making sure that the liquidity to do that is there, and at which price can I do both, right? That is what a user should care about. So we built our system in such a way that that is essentially what a user can care about. But still today, when we're dealing with other centralized crypto exchanges and data providers and the like, there's still a lot of ongoing education happening there.
Yeah, okay, understood. Can you tell us a bit about the actual investors into the Ondo product? So, or are those maybe retailers? Is it rather like large whales investing? How do you see that?
Yeah, it's definitely a little bit of both. So right now, anyone with a crypto wallet and stablecoins outside the US can purchase these things in the secondary market. We've seen some of our wallet partners really try to focus on two key client segments. Number one is the retail audience outside the US that has historically struggled with access to these assets, right? It's kind of the thesis that the stablecoin led. The stablecoin is a very good way for a global audience to get exposure to the US dollar, right? It's a very seamless way to get access to it. We've seen major adoptions in markets like Argentina, in Africa, Southeast Asia. And it's those same markets where people struggle to get access to the US dollar. They definitely struggle with access to US capital market products more broadly. And so we're seeing significant amount of users access the product there, and some wallets really betting on those geographies to try to target, the population that historically has struggled with access. That's one. The other bit is really the very, very large whales that are crypto native that hold sometimes tens, if not hundreds of millions of crypto on centralized crypto exchanges or sometimes in Web3 wallets, and that now for the first time have a platform where they can have both their crypto and their stocks in one place and really seamlessly trade between them 24/5. That as a value prop already rings very interesting to many. And we're seeing, some users literally buy $10 million of tokenized Google. Actually, earlier today, we had a user buy $9 million of tokenized Google, more or less in about 4 minutes time. So those are clearly big whales that are making big purchases. And for them, the main appeal is to have everything in one spot, moving towards the everything app that, there's been quite some rage about. Because these assets are tokenized, they can live on the same rails as other crypto products. And so crypto native audiences, crypto native wealth can access all these things in the way that they're used to and want to.
Do you see in your vision for Ondo a move from like those individual investors also towards like institutional adoption, or maybe also more in general, what do you think is needed for the the whole tokenized asset space to move even more into the institutional adoption phase. We see it a bit on the money market fund side, but I'll be interested to hear your opinion in general, how that move can actually be accelerated.
Yeah, I think when you think about the overall roadmap of how this is all going to evolve, I think the first user group that will always adopt this stuff is those ones that historically have not had access, right? All of a sudden, if you have access now, you're definitely going to start using it. The value prop is a complete no-brainer. But that's typically retail, unbanked type of populations or people who have struggled. Then you go into the next user group, which before had access, it was just not, the user experience wasn't that great, right? You have people globally, but quite frankly, even in the US over time, although to be clear, our current product is only available outside the US. These users have a brokerage account, they have a crypto account, they would love to have them in the same spots. Now, all of a sudden, that's available to them. So they start over time even migrating some of their assets over from the brokerage into the crypto environment, and they like having everything in one place. So that's really a convenience argument, as long as the experience is more or less equal, if not slightly better. And then the third group that is going to adopt this stuff, I think, is really the group that already has access, and pretty good access for what it's worth. They have access to services that a lot of the retail audience, quite frankly, doesn't have access to. But then at some point, your product reaches a scale and a utility that they can't get in TradFi. And that's when you get to institutional adoption. So a good example of that for tokenized treasuries may very well be, right now, a tokenized treasury, you get this question a lot, like, why would I even put my money into a tokenized treasury? Why not a normal treasury? Well, it turns out in our tokenized treasury products, you can subscribe and redeem 24/7. Right now with stablecoins, pretty soon with tokenized bank deposits. So the concept of a cutoff disappears. That as a value prop to a lot of institutional investors, I think will ring pretty interesting, because then let's say you missed the cutoff on Friday, 2 p.m., 5 p.m., whatever it is. If it's Saturday, 2 a.m., and you want to sweep some cash into a tokenized treasury, you can. And that's where you start seeing institutional adoption, really, is when the utility you can offer on these tokenized products is better than what is available in TradFi. But in order to make that happen, sometimes we also need TradFi rails to come along a little bit. And we're starting to see that happen with major banks rolling out 24/7 tokenized deposits. There's a lot of pilots going on to actually tokenize an individual treasury so you can move it around 24/7 as collateral. Once those TradFi rails start moving 24/7, I think it'll be very quick, a lot quicker than what a lot of people think, when tokenized products can have a much better value proposition than traditional products.
Are you also looking? I'm not that sure how closely also in the US that's even possible on your side, but in other jurisdictions there's definitely the possibility. So instead of taking like treasuries or even stocks and then wrap it and tokenize the wrapper, really tokenize the issuance itself. Obviously, with treasuries that might need a bit of the collaboration with the treasury itself. But looking at other asset classes, maybe even or like smaller equity shares, or is that something you're looking at intensively?
Oh, for sure. Because there are different ways to tokenize. We recently put out a blog post. Not tokenization. Not all tokenization is created equal, right? Because right now in the market, there's a lot of debate around what is the right way to tokenize.
Yeah,
You've got the DTCC and Nasdaq, etc. They're starting to work towards a tokenized version of whatever asset is actually held at the DTCC. That's nice, because then you can move the underlying asset around 24/7 and settlement dramatically improves. Great. Then there's a version of tokenization where it's not at the DTCC level that you're doing it at the transfer agent level. That means that an individual company can go and tell a transfer agent, hey, I would like you to tokenize some of my stocks natively, so that the token itself is the equivalent of the stock of the public company. And that way, an investor can hold the actual stock on chain and, again, move it around 24/7 between allow listed wallets. If you want to do SEC lending over time on chain and actually have the underlying stock on chain, that could be quite beneficial. Great. And then there's the version that we do, where instead of tokenizing the native asset, you tokenize it via a wrapper form. Could be the concept of beneficial ownership or something, or a new legal structure. There are other benefits of doing it that way because, particularly if you issue it as a new instrument, you can issue it like a debt instrument, for example, against the underlying. That's how we did Ondo GM, and that allows us outside the US to make it permissionless transfers in the secondary market. Can't do that if you do native tokenization, for example, at least not currently the way the US laws are written. So each model, I think, has different benefits. Ondo as a company actually has the reg stack to do all three of them. So that's why we try to stay abreast of each and every one of them and make sure that we understand the benefits of each. Over time, we'll definitely do all three of them. But my overall message, I guess, to the audience would be don't let yourself get suckered into thinking one is so much better than the other because one company said that this is so much better. Typically, companies try to push that narrative because they can only do one model and not the other two, right? I think we're in a unique position because we can do all three. So, each one has benefits.
Now, looking a bit into the future, so now having a tokenized, let's say, asset stack allows for totally different possibilities, right? Have you considered yourself and also for Ondo as a company, how that might actually shift market structures? So are the roles of the banks going to stay the same? Are the roles of the other financial intermediaries are going to stay the same? Or how do you see a change actually happening in the future through tokenization?
Yeah, that really is the $1 billion question, isn't it? It's a great question, though. I would have loved that question when I was at McKinsey.
A couple of nice slides on that.
Oh, I'm sure.
Yeah. And now we have to build it.
I mean, the role of companies in financial services obviously will change once assets become increasingly tokenized. And, this will be most apparent with concepts like the CSDs and the TAs, or a custodian and a bank, what a bank is able to do. Their role may change because, take the concept of a bank. A bank and the services they do, it was never really built around infrastructure where you can take your asset and move it into a self-custodial wallet 24/7, right? That whole concept of self-custody, it existed in the form of cash, I guess. It's not very safe. And you could argue that self-custody in a crypto environment also still has some safety issues. But obviously, it's a very different paradigm. And in a world where people would like to have the ability to do self-custody of their assets, the role of a bank may change over time. Maybe instead of holding the assets, they hold the private key, so they hold a shard of a private key. So what that role is in some instances will change, but then again, it won't really change. It's just a different implementation of it. Again, going to the example of the bank, whether they hold the actual underlying asset or they hold a shard of the private key so they allow you to hold the asset, you could argue that's a little bit of the same thing. However, if a bank doesn't actually hold the asset, can they still do maturity transformation on those assets? Probably not. So it does change your business model quite a bit. I think a lot of companies are not really ready for those types of shifts, quite frankly. But it is still early days. However, every single TradFi company, I think, should be actively looking at all of these developments and forming a perspective of what some of the new business lines and new opportunity is that they could have in a world where assets become increasingly tokenized.
Now, specifically for Ondo, looking into the future, seeing how also the financial industry develops and develops even further into the tokenized world, what's on your agenda? So what are your next steps? Where are you planning to go?
Yeah, great question. Right now, we're at a stage where, I feel it's been 10 years since I did my first tokenization project. You would have expected us to be a little further than we are now, but in the 10 years, we're still pretty early days, quite frankly. We are and we aren't, right? Like, there's only one asset class that has reached a little bit of terminal velocity as it comes to tokenization, and that's cash, right? In the form of a stablecoin. I forget what the latest numbers are. Still, in my mind, stablecoins are 300 billion in AUM, give or take. It's probably bigger at this point. But, those are meaningful numbers, right? And it's growing very, very rapidly. But everything else is still early days. Tokenized Treasuries is almost 10 billion. But it's only 10 billion in a market that is, I don't know, God knows how large. tokenized stocks as a total category is not even $1 billion right now. So it is very early days, but in part that was because the liquidity layer to do these trades on chain wasn't available. We needed stablecoins for that, and they are now available in size. That's why you're seeing all these other asset classes really come on board, as long as you can guarantee redemptions and subscriptions with stablecoins in size at all times. Then investors feel comfortable really entering a category and exiting it at the same time. And that's why you're seeing such rapid growth in tokenized treasuries. When I joined Ondo 2 years ago, the entire category was less than $1 billion, right? Now we're at 10 billion. And so I expect tokenized treasuries as a category to continue to grow. Tokenized stocks reminds me of tokenized treasuries 2 years ago. So, maybe in 2 years, that thing will be at $10 billion. Still, in the grand scheme of things, that's not a lot, but it is growing rapidly.
Mm-hmm.
But we at Ondo feel pretty comfortable that at this point, we've built the infrastructure to bring these assets on chain in a way that makes sense for investors, that has good investor protections, and that people feel comfortable entering and exiting these positions with ease. So if you assume that more or less right now, we've reached a point where TradFi assets are making their way onto crypto rails with ease and at scale in terms of number of assets, I think what you'll see over the next 2 years is that people will really fundamentally innovate in all the other things surrounding it, whether that's brokerage, prime brokerage, really in particular, right? Not just buying spot access, but really getting leverage on these assets and really being able to deploy trading strategies at scale. That's a major focus. We're starting to see some of that with perps on equities. Perps are not perfect products, but they're pretty cool in a sense. So I expect perps on equities to grow, but there's other ways to get leverage that really haven't been implemented that we're focusing on as well. And then in parallel, I think what you'll see is how people do broader asset management, passive and active strategies will fundamentally change, like the customization that is enabled by having these assets on public blockchain rails with DeFi enabled, I think is going to take a lot of people by surprise. Like right now, if you want passive exposure to a certain theme, you have to pick from the available ETFs that are out there and that are very active, that are well managed by large asset managers. Thank you very much for doing it. But for that service, they do charge, admin fees that have been coming down over time. But depending on the ETF and depending on how competitive it is, those fees can still be pretty high. Once all these individual stocks live on blockchain rails, it is trivially easy to start setting up smart contracts that can essentially do the same thing as a passive ETF, right? Just at a much lower cost base and with a lot more customized flexibility. Like if I want defense exposure, right now, most ETFs that offer defense company exposure, they don't include the tech forward companies like a Palantir. If I want to create a custom investment portfolio that does a couple of defense ETFs plus a bunch of Palantir in it, it's very trivially easy for anyone to set up a vault or whatever you want, or fund or whatever you want to call it, where people can basically put in stable coins. It invests automatically into these individual stocks, and then it rebalances monthly, quarterly. Doesn't matter. You pick, right? You can set these things pretty seamlessly. So those things I think will start popping up more and more, where it's really innovation in asset management, wealth management more broadly, now that these individual stocks are tokenized. It's very similar to all the innovation that we're starting to see in banking and payments now that we have stable coins, right? Over the next 2 years, I think we'll see pretty dramatic innovation in brokerage more broadly, wealth and asset management, because we're starting to have tokenized stocks and treasuries.
Totally agree on the individualized portfolio side of things. That's going to be a huge use case of tokenized assets. And also one thought on the timeline you said, I also believe we are very early days and we are already a couple of years in it. However, if you believe or if you think that we are restructuring how financial markets work from ground up, that we are really reshaping the back end of the financial industry, I believe that is going to take a couple of years. That's all right. So having patience a bit, that's what we try to stress also within the market. It doesn't go overnight, but it's definitely going to change quite a bit. Yeah.
Yeah, and it's funny because then you work years towards it, and then all of a sudden, all the components are in place, and that's when you see the hockey stick.
Yeah.
And all the people that say, oh, it'll take more time, is typically when you're in this stage. And when the hockey stick occurs, everyone's not ready.
Yeah. You totally see that with stablecoins, right? Everyone has been watching, and now suddenly everyone is a bit too late to have a strategy. And I totally believe we are going towards that route on the tokenized asset side as well. No, it's very
100%.
interesting, Ian. Maybe as a last question also, as we have a collaboration going on, obviously we are gonna partner on the products, meaning that the Ondo products will be able to be purchased through BX Digital, our exchange in Switzerland. Apart from that, when listeners are interested in the Ondo products, what can they do today, and how can they get access to it, or what should they do if they're interested?
Yeah, I would definitely read up more on Ondo. We love, more recognition. We put out a bunch of blogs about our thinking on broader capital markets, so would highly recommend that you just also check those out. Our assets are available on a wide variety of platforms. As mentioned, they are permissionless as well. So, right now you can go on via a wide variety of wallet and even increasingly centralized crypto exchanges to actually purchase some of these assets. So highly encourage everyone to just check it out, see how it works. I think the main thing limiting tokenized stocks and even treasuries, quite frankly, more broadly, right now is still a lack of understanding of what is already possible. The moment people see it and realize it, they're like, oh my goodness, this is actually better than what exists today in TradFi. But it is overcoming that lack of awareness. It's overcoming those educational barriers. That is the number one thing.
And also, like when you enter the cryptocurrencies a bit earlier, it's always like start the first transaction, right? Start doing something, try it out, and then you see it how it happens, how it works.
100%. And once you see it, it's hard to unsee it.
I think that's a very good sentence to close on. Ian, it was a big pleasure to have you here. We can't unsee it, what we saw. So I'm looking forward to continue working together with you. Thanks for being here.
Awesome. Thanks, Lidia. My pleasure.
This was Inside Digital Assets, a joint project by BX Digital and Seturion. If you enjoyed this episode, subscribe to our podcast and feel free to share with others.